Hey, good morning, everyone. It's Edna Keep here live with Free Coaching Friday, all about accessing all the capital you could ever need to fund your real estate deals. So hopefully you get some value out of this today. So a lot of people think, I get this question all the time, Edna, why would people give me money to finance my deals? And the mindset shift that has to happen here. Hey, good morning, Ivan. How are you? The mindset shift that has to happen here is that people aren't just giving you money to help you out. People do it because there's something in it for them. Have you ever heard that acronym WIIFM? What's in it for me? So that's what people are looking for. What's in it for me? So when you're presenting your deal, make sure you tell them that. What's in it for them? First of all, how you're going to get their principal back to them, because that's a major mistake I always see people make as they start talking return on investment as opposed to return of investment. And you know, when you're dealing with larger amounts like $100,000, the first thing people want to know is how they're going to get their principal back as opposed to the return on their money. You have to show them how the money comes back to them so that their risk level is reduced. So when you do your analyzation form, it's going to show you on there how you're going to pay your investors back. It's going to show you what cash flow you have, and then depending on the number of investors you have, how much you can pay them back each month or each quarter. Does that make sense? Okay, so first of all, that's what you do, is you work on paying them back their principal. And then you talk about the return on their principal. Does that make sense? So your return on your principal is figured out through cash flow, mortgage pay down, and equity appreciation. And equity appreciation comes in the way of forced appreciation, which is you increasing your rents, decreasing your expenses, increasing your occupancy, decreasing your vacancy, same thing, but you know what I mean. So those are the ways to start talking to investors so that you can access all the capital you need. So you got to stop thinking of, and I mean, it's okay for you to have something, what's in it for me? Because people are going to ask you that too. They're going to say, well, if you're doing all this for me, what's in it for you? Well, the fact is, Mr. Investor, what's in it for me is I do all the work, but in 5 years or so after you're paid out, then I share in all the profits. So it's a little bit more of a long-term plan with me, but I'm willing to do that to share the equity of you or with you. Does that make sense? So those are the ways that you start talking to an investor to show them how and what you're going to do with their capital. So if you can start thinking of what's in it for them and present that to them all the time, that's what's going to get you the investors. One thing that I think I've done a full video on this, but another thing that I see people make a mistake on is, I'm a brand new investor. You got all the money, I got none. Give me your money and let's practice and see what we can do with it. No. You do not want to do that. People do not want to hear that you're going to be practicing with their money. So a lot of students, what they do, and this is what was recommended to us when we started, is practice with your own money. And then when you got some track record, then you can show them, hey, I did this, I bought this house, I did that, I bought this apartment building, I did that. And that builds up your credibility. So if you don't have credibility yet that you've got that kind of experience for yourself, that's where your team is very helpful. And also why most people don't buy multifamily units all by themselves. Because you need a team. So you need a managing partner, you need team members who can help you qualify for the mortgage, and just help you manage the whole deal, especially at the beginning, because there is such a learning curve when it comes to multifamily that you don't want to be just practicing with people's money. So when you're talking to a potential investor, let them know the experience of your team. Your team, you should remember, is your realtor, your mortgage broker, your lawyer, your accountant, your property manager, your coach, your real estate investment network club that you belong to. All those different people are people that are on your team. And as you start getting into bigger deals, you're going to have more team members. Like we have different team members that have to qualify for the mortgage. And especially if you're in a situation where, you don't have the money yourself. Who's going to help you qualify for that mortgage? Are you going to be able to do it on your own? Net worth is very important when you're qualifying for a mortgage. Generally, the lenders are looking that you have a 25% net worth of whatever the loan is they're going to give you. So if they're going to give you $1 million loan, they want to know that your net worth is at least $250,000, or you and the partners that are on the deal. Does that make sense? So do you guys have any questions when it comes to that, to accessing all the capital you need? It's the lifeblood of your business if you're going to scale. There's no way to really scale your business without having capital. Now that capital can be your capital. It'll just take you a lot longer because then you have to build up the value of your building, pay down the mortgage, et cetera, et cetera. And I know a lot of people that have built it that way, but if you want to as well. I'm just going to kind of read my notes here to make sure I have everything. Okay, so back to capital is the lifeblood of your business. Without it, bills pile up, nothing moves, and key people search out greener pastures. So you have to be able to keep your whole team happy. That's your realtor included. You know what? If you're looking for buildings and you just look and look and look and look, pretty soon they're going to go, that guy or gal is never going to pull the trigger, and you'll be done. So don't waste their time again and again and again. And your realtors out there will totally appreciate me saying that, because I know that there's a ton of people out there that do that. And then they wonder why nobody brings them a deal. It's because they know you've already proven to them that you don't pull a trigger. If you have trouble pulling a trigger, get yourself a coach. They will help you pull that trigger. It's after you analyze the numbers and it's decent or a great deal, you have to pull that trigger. And you know what? It won't always work out perfect. It's impossible for your life to always work out perfect. So stop being a perfectionist and just get it done. Okay, so accessing capital is definitely a skill. And it just surprises me how many entrepreneurs don't hone that skill. They don't spend the time needed to learn what to say, to learn how to say it, to put a presentation in writing so that they don't have to make it up every time. A 15-minute presentation with your story included, because people like to connect with you, is the most powerful thing you've got when it comes to accessing that capital. You have to know what you're doing. The other thing that I tell people when they're first starting out is don't blow away your investors by your lack of experience. If you really don't know what to say and you haven't taken any training, just know if you go in there and you blow it, there's a good chance you won't get back in the door again. Take somebody with you who knows what they're doing. Set up a three-way call. This is what I encourage my students to do with me when I'm coaching them, is to set up a three-way call the first few times when you're talking to an investor. Let me talk to them. You listen, you learn. They're your investors. I'm not looking at taking them from you. They're your investors. But by you bringing me on, I'm a third-party influence. So remember that line, third-party influence. I'm going to say good things about you, and I've probably seen your deal. Otherwise, I won't be talking on the phone with them. I do want to see your deal ahead of time so that I know what I'm talking about too, and then I'll help you. Talk your investor through. That another way to do that is to set up a group of investors in a room and have me come and present to them. I'll help you do that too. You know, I like and this is my what's in it for me, just in case you guys ever wonder. So you're always going to get people out there who go, I like that idea. But you know what? I want to be on your side of the fence. I want to do what you're doing. I don't want to be just the person putting in the money. I want to learn how you do it, and then I want to start accessing money. So then that's where I can say, well, come and take my course and I'll teach you how to do it. Now, about 1 in 10 investors will do that. It's not the majority. The majority of people will just want to be silent investors. But it's a good opportunity for you to line up some money, be a success story for me, which is another reason that I'll do this, and then there'll always be a few people that want to do it themselves. I've had people go through my course though, and still choose to be a joint venture partner. Sometimes just to learn, because I always recommend, you know what, when we started, we were joint venture partners for other people who had more experience, and it took so much of the fear out of doing the deal. So by taking that fear off the table, and you sit on the same side of the table as your joint venture, or you have sat on the same side of the table as your joint venture partner, you can say, I've been there, done that. I felt like this when I first went in. Now I feel like this because I found this. And if you can talk about it from their angle, it makes so much more sense too. So don't be scared of finding somebody more experienced to help you with that capital, because maybe the first time out it's not going to be your deal that gets it. But some people, and this is a mistake I've seen a lot of people make, they go, you know what, I got this investor, he's got 100 grand, he's hungry to give it to me. I'm just going to wait till I find that perfect deal. Well, guess what? By the time you find that perfect deal, that investor's long gone and you lost them. Why not put them in a deal where if it does happen to be one of ours, you get a piece of the action too, and you learn at the same time, and you go through the whole steps to make the deal happen, and then you can do it next time. Because what we always work at doing is getting people their principal back as quickly as possible. So then they're lined up to do the next deal. Does that make sense? Okay, let me just see, make sure I have everything on here. Okay, so another one is a properly executed executive summary is the key as well. Another big mistake I see people make is way too much detail. And for those of you out there that are very detail oriented, you're the hardest people to convince, or I shouldn't say convince. You're the hardest people to raise capital because you think of every single thing that could go wrong, and that's the stuff that goes through your mind. Some of you are too smart for your own good. You know everything that could go wrong, so then you feel like you got to tell everybody everything that could go wrong. Yes, you have to tell people what could go wrong, but you got to lean to the positive. I mean, it's been proven again and again and again that real estate is a great long-term wealth building strategy. So no, you're not going to be a millionaire tomorrow. But if you can get that point across, one of the key things that I use all the time is, you know what? You got your mortgage pay down every month. That alone is a better return than any bank is ever going to get out there. And what are the chances of us not paying the mortgage? Things have to go pretty bad for us to not pay the mortgage. And you'll do it as ever in your power to make sure that you keep paying that mortgage. So to me, that's your fixed rate of return. We can never use the words guaranteed, but as long as you're paying your mortgage, you're getting anywhere from 4 to 7% return on your money right there. A lot of people think that really high numbers are what it is that's going to get you the investor. Again, not true. People are more interested in keeping their money safe and secure. Even people with billions of dollars. And you know what? People with billions of dollars, their biggest thing is to keep their money safe and secure. It's not so much about growth anymore. And I know a lot of us, it's about growth, especially when we're first starting out. But after a while, when you got that 100 grand, what's the worst thing that could happen? Losing that 100 grand. Not getting that 10% return that you promise them. It's that losing the 100 grand. So if you come across a deal and after doing your analyzing, you see that it's going to pay out 30%, people are usually pretty excited and they want to share that with their investors. I've got a deal that's going to pay you 30%. And they think that that's when people are just going to be all over it. Don't do it. Big mistake. You want to keep your numbers conservative and talk about a 9 to 15% return. And if it's extra in the long run, bonus, then they're extra happy. But if you start talking 30% return and you hit 25, guess what? Nobody's going to be happy. They're going to say, hey, you told me 30, 31, and I got 25. So be really careful. And if you can be consistent with this and be in front of the right people consistently, you will be able to access all the capital you ever need. So hopefully that was a good session for you. Hopefully you got value. I will see you guys all on Mindset Monday.